Yo, what's good, guys? This is the boy FVG, and today we're going to talk about fair value gap, right? Fair value gap. What is fair value gap? Fair value gap is very just in a layman terms, it's just gap in between three candles, right? And this gap usually gives a trading opportunity. So in this video, we're going to talk more about fair value gap. How to make a lot of money using fair value gaps. With this strategy, only this fair value gap, you can make a lot of money. You can make a lot of money. I remember back then, in my days, I do trade fair value gap very, very well. And I do make a lot of money, some money, and I do feel like, wow, Forex is simple without knowing the trend line and stuff like that. So today we're going to talk more about fair value gaps only. Alright, so I'm going to tell you guys the tips and tricks, when to use them, when not to use them, and what to look out for when using a fair value gap. Right. So in the next video, we're going to talk more about that. So what is fair value gaps? Fair value gap literally means an imbalance in the market. The gaps the market lives in the market, right? Just like a gap, right? So this is a scenario. Let's say we have a green candle right here. Right, this is a green candle. This stands for bullish. Right, we have a green candle right there. Yes, guys, and we have another green candle right there. This time, let's make it a little bit smaller. Yeah, we have this kind of candle. Then the next candle does something like this. It's this big, right? Then we have another candle right there. Another green candle above it. It is to market can do something like this, but for explanatory purpose, let's do something minimal like this. Yeah. So the space in between the first candle and the third candle is what we call fair value gap, and this is the space right there, right in this middle. This middle right there is what we call the fair value gap. The space in between them is what we call what the fair value gap, and this causes what imbalance in the market. So these are usually called imbalance or fair value gap. And the short form for fair value gap is FVG. Right? If you don't want to type fair value gap in full, if you don't want to type something like this, fair value gap, sorry. If you don't want to type something like this, fair value, you can just look for the short form of fair value gap is what? FVG. Right? So anytime you see FVG, know that it's indicates the word fair value gap. And you just need to know that it can be there be a green candle or red candle, right? Green or red. So this is what fair value gap is. The space in between the first and the third candle is what we call a fair value gap. So this is what FVG right there. Right. And this usually occurs. The reason why we have a fair value gap is because, let's say for example, if buyers are already inside the market, then let's say this is a 1 hour candle. Then we know we are expecting another one. Once this candle is closed, we are expecting another 1 hour candle to be created, right? Then something like this happen. Maybe a news happen or something like that, or an industry puts come in the game. Then we saw this drastic move to the upside, like very, very big. Now, normally the market next candle is meant to what? It's meant to come down and do something like this. But no, what did the next candle also did? The next candle also went to the upside, creating a what? Creating an imbalance in the market. Right. So this right says that is an imbalance in the market, and this is usually not accepted in the forex market. Right. So this is just like a loss to the side of price getting is an imbalance in the market. It's just like you jumping one. Let's say we are counting 1, 2, 3 now. Right. Then from 1 we jump straight to 10. Right. From 1 we jump straight to 10. So the gap in between the 1 and 10 is what? 2, 3, 4, 5, 6, 7, 8, 9. 2, 3, 3, 4, 5, 6, 7, 8, 5, 6, 7, 8. Right? So that's the gap in between them. So the gap is what we call an imbalance in the forex market. I hope you all get me. Right? So let's do a quick test on the forex market to say that this is literally simple, very very simple, and you only knowing this enough. You knowing this can make you a lot of money. Just knowing fair value gaps and they want to trade and they want not to trade and what time frame you can trade them. Right. So I would like you guys to hit the subscribe button. If you have any other question to ask, you can drop that in the comment section below. I'll be right there. And if you want me to create any video, you can drop the topic in the comment section. I'll also be there. Right. So let us go into the real chat. Alright guys, so this is now on the live chat, right? So this is GBP USD, my favorite pair, the only pair I've been trading for 3 years now. This is the only pair I trade, right? You can check my Telegram group, NFX Trading Academy on Telegram. I will drop the link in the comment section below or on the description of this video. Right? That should be the channel yours should be if you want to make consistent profits in GBP USD. Because I've put 3 years into 3 years of my life into GBP USD. So you know what that means. You know, me and GBP are very, very close. We are tight friends. Right. So right here we made money throughout this zone. You can go check the GBP. You can go check my Telegram channel. Right, we made a lot of money. Alright, so now fair value gap, just like I said, is the distance between the first candle and the third candle. As you can see, this is the first red candle. And this is what? This is the third red candle. Now, see the drastic move. See the candle in between it. See the movements. Right? This movement is what gigantic. So what do we expect? Let's say, for example, we did not know that something like this play out. Remember, you have to be sincere to yourself if you are analyzing the chart that has played out. So you also have to be sincere to yourself. Just as if you don't know this played out, right? So the more you're sincere to yourself, the more clarity you get in the first market, and the more your strategy will make sense to you. So let's assume this candlestick haven't played out, right? And note this is the 1 hour time frame. For a day trader, you should be analyzing on 1 hour time frame. Alright, so this is what? This is the first candle and this is what? The third candle. Imagine the space in between it is what? This and this. And remember, it's usually on the wick. Pay attention. It's usually on the wick of each candle. The wick of the first candle and the wick of the third candle. By the end of this video, I'll give you guys a tip, right? How to know the perfect place the market will reverse. Like the perfect, if I look at a sniper entry and you see something like this, usually when I see a candlestick as big as this, I'm usually happy. Like I'm very, very happy because I know I'm making money to the upside. I'll also be making money to the downside because of this tip I'm about to share to you guys during the end of the video. So stay tuned and watch the video to the end because this tip will give you a sniper entry and this works 80% of the time. Like I'm not capping, 80% of the time. Alright, so this strategy or this tip on only fair value gap, on only this kind of gigantic moves, it gives you a 80% win. Like you can be very sure that markets will reverse off this point, right? Though there are some things you have to look for, which I'll talk about in the next video, but I'll just tell you the tip so you can just find money for New Year. 2025 should be a new goal for you guys. Just have to pay off your bills and do some type of stuff, right? Alright, so now the first thing to do is what? Is look for the 3 candles. The first red candle, second red candle, and the third red candle. Right? They have to be the same. Don't try to look for green, red. And mind you, my blue candle indicates green. So just so you know. Right, so this is it. First red candle, second red candle, third red candle. Right? Always look for 3 candles that have the same color. Don't try to look for red, green, blue, or Nigeria flag or US flag, stuff like that. No. You have to make it identical. Right? So I want to see something like this. Always remember that markets will reverse off this point, this box. That means the space we left in between the wall. Not reverse, like markets will tap into this zone. So once you see market start to go to the upside, you can just enter a trade right there and you can put your CP inside the box and you'll be rest assured that alright, market has a high potential of entering this box, right? So now as you can see, the market will enter the box and it comes down to the down. Yeah, and it entered the box and continue to the downside, right? So let's look for another example. Now, this is another example, right? The first example is that what we saw right here. See, the red candle, sorry, this is blue candle, which stands for the green candle. The green candle, green candle, green candle, right? Then I said we draw the word, the wick in between them. And you can see, you see market what? Reject off this zone, as you can see. Then we have another one again, the blue candle, and the what? And the blue candle. And as you can see, market what? Always tap into the zones. You can see. So the thing is, you should wait for what for time where the market wants to what, come to the downside. Let's say, for example, this is a blue candle, that means you'll be looking for a sell trade as of this point inside the box, or as of this point inside the box. I hope you guys get right. So now, what you shouldn't be looking for in fair value gaps is, don't try to look for the tiniest space in the candle. So the more the imbalances, the more you have a high potential of making profits, right? So let's say, for example, look at these three identical candle, the first, the second, and the third. As you can see, there isn't space in between them. Look at, this is week, this is the first week, this is the third week. So this is where, so this isn't valid. This is a invalid fair value gap. As you can see, this isn't valid at all, right? Then the second thing you should also look at is be, be keep notice of the colors of the candle. Green, green, red, invalid. This is invalid at all. Don't try to trade something like this. Always trade the one that has same color. And as you can see, red, 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 but there isn't space in between them. So this isn't what? This isn't valid. What you should be looking at is ones that are valid. And for example, something like this is valid. This and this, and as you can see, market what? Market entered the fair value gap. So this assume whereby market finds way one way or the other to what enter. Let's say there's a push to the upside, a very big move to the upside, leaving an imbalance in the market. Market will find way to what to tap into that fair value gap. I either go to the downside or continue to the upside. It will do either of the two, right? Forex is all about 50-50 game. It's a 50-50 chance either to the upside or to the downside, right? So it is as easy as you looking for fair value gap, and try to look for the perfect timing whereby the market wants to move to the downside, and you should know that your take profit should be inside a fair value gap, right? So let's look for a live example. Not live example, because at the time trading this, the market is closed already. At the time shooting this video, the market is closed already. Let's look for another fair value gap. All right, so this is a perfect fair value gap, which what? This is the first one. Now you see the gaps are clean. This is the second one right there. This is a great push on the sell side. So you see this one hasn't been mitigated, but one way or the other, if we are to move this to the right side, you see that market usually push into this zone. Like a candlestick or a week usually tap into the zone. But for now, the only candlestick, the only fair value gap that was mitigated was the first one, which is this. This has been tapped in. This one has been tapped in. So you know how the game is played. You try to look for a change of character to the downside, to the upside. I mean, and try to put your take profits inside the fair value gap, and this will fetch you $43, and you'll be risking 10 pip. Very clean, as clean as that. Always know that a fair value gap is a point whereby markets is an imbalance, and imbalance will surely want to be filled, right? So forex market want to fill any imbalance it spots in the forex market, and you can use that to our advantage. And so for this, as I said, if we should move it to the right hand side, we are going to see a candlestick in it or a week. So let us move it to the right hand side to see if I'm wrong. I won't say anything, but I can't be wrong. This is my pay. Alright, so let's move it. Voila. Type sheet. No? one of the sweetest, see, first technical analysis isn't hard. What is probably an first market is you trying to remove the fear of losing money. Once you can remove the fear of losing money, the rest is what? The rest is easy. As you can see, you know that, one way or the other. So let's say, for example, you spot a reversal. Let's say, okay, see this kind of reversal now. Let's say you enter the market here and like, the market starts to reverse from this spot, and you try to use fair value gap to be your take profit, and you notice that, this fair value gap here haven't been mitigated. Like nothing has entered this fair value gap. This is a virgin fair value gap. It hasn't been touched. I'm like, wow. Let me see. Let me try my luck. And I put your take profit right there. Like, this is a hell of a ride. This is a hell of a ride. This moment alone can make you rich, but not richer than Elon Musk, though. Just be careful. And see what we see. This will say this clean. This is clean, my bro. This is clean, right? So that is just it about fair value gap. It's easy as ABC. Space in between the candles. First candle, second candle, third candle. Okay, there's a gigantic candle in between them. Okay, that's an imbalance. To use a box to draw the space in between them and wait for market to enter this zone to move to the downside or move to the wall to the upside. Now for the bonus tip, are you ready for that? Are you ready for the bonus tip? Should I say it? Should I say it? Should I say it? All right. Let me give you the bonus tip. The bonus tip is to use a tool. Is to use a tool called the GAN box. This box right here. It's to use a tool called the GAN box, something like this. GAN box. It's to use a tool called the GAN box, right? As you can see, the GAN box is split into two parts. We have the top, the bottom, and the middle. This kind of the heaven side. This is the heaven. This is the hellfire side. Let me try to make it easy. Yeah, this kind of shit. So what I'm gonna do now is, anytime you say gigantic candle, as I think when I'll make thorough, when I make a kind of investigation or stuff like that. Investigation, is that a correct word? Whatever. When I made my findings, I think 30 pips above is usually a strong imbalance in the market, even though it's 29.6. Market tends not to respect it. Okay, enough of the cha. Let me show you guys how it look. So as you can see, trying to calculate the pips, we can use two things. We can use the ruler tool, or we use there's nothing you can use again, or you use the take profit and stuff like that. But I usually like to use the ruler tool because it's one of the sweetest tool I can use to find the middle of find the pips each candle moves. So let's look at the measure tool, which is the ruler. We tap to the body of the candle, the top to the bottom, as you can see. I think here is estimates 109. Yeah, so we can also use the ruler to, you see, it gives this type of thing. It gives the straight line in the middle, and we tend to look at. So this is telling you that this is the middle of the candle of what you just drew out. The middle is right there. But the bad thing about this is immediately we tap out of it, it moves away, like it gets clear. So that's when the GAN box comes into place. Click on it and we do something like this, and we try to look for the middle of it. So this is where the middle is. So immediately the market comes into this line, we enter the trade there, and we look for a little take profits, a little stop loss of 20 people thereabouts. Let's say 20 pips right there. Yeah, you see, and it is almost close to our stop loss, but because of the experience, you can't touch me. We're gonna put our take profit anywhere you feel like, depending on risk reward ratio. And let's say for a reason we stop here. So this is a 8 ratio risk reward. Then as you can see, it's kind of perfect. Taps into it in the middle of the candle, and it continues to the downside. Right? So this is the bonus tip. And don't share this with anyone. It's kind of private. Right, just kidding. All right, so let's look for another. Let's look for another scenario. All right. Remember I said 30 pips, right? So let's look for a candle that's 30 pips big. And I think this candle is 30 pips and above. This candle is 42. So right, this qualifies. I will take our gun box, from the middle, from the body, top and bottom, anywhere you feel like, and and you see it immediately taps into the gun box, in between the gun box, you bounce off it. As you can see right there, it bounce off the zone, and that is the one of a kind. That is the sweet trade right there. So that is it for this video. I'll see you in the next video. And if you have any other topic you want to talk about, you can just drop it in the comment section, and I'll be in the comment section looking at those comments. And please kindly like and subscribe and share this video to your loved ones. All right, guys. With that being said, I'll see you guys in the next video. Peace and out.